Hello traders, today is the 25th of March. My name is Hornsey, market and trading. Today we're looking at the Canadian dollar versus the Japanese yen. Okay, the reason I want to start with the CAD yen is because if we look at the Forex heat map on YouTrading.com, we can see that the yen is currently the strongest currency, closely followed by the Swiss franc. So we've got moves into the safe havens. Canadian dollar is the weakest. So we've got moves out of the CAD because of a change in the price of oil. If we go to the headlines, we can see here that US President Biden and the EU are coming together to reduce the bloc's dependency on Russian energy. We're going to sort of try and get energy security back into Europe, see if we can drop the price of energy, try and drop inflation, and move our sort of focus from Russia towards the US and Canada. So if that happens quite quickly, that would be good for energy prices at least. Obviously, it's going to really annoy the Russians. If we go back to the active trader platform, go to a line chart and then overlay CAD yen with the Brent contract. Now we can see here that since March 2020, we had a big dip down in the sort of Brent contract. And then for the most part, since then, the CAD yen and the Brent contract have sort of closely followed each other. Going down to a weekly chart, you can see that come end of December, Brent really sort of accelerated higher, and maybe CAD yen is going to sort of come to meet it. Or maybe Brent's going to come back down now because of the developments from the US and Europe and come back and meet the CAD yen. All right, just removing the Brent, going back to a candlestick chart and the monthly time frame. All right, where we're right now at CAD yen is 97.137. If we look to the left, this May 2015 candle, this low here, the low is 97.597. So got it on the blue line here. Monthly resistance, you can see March 2022 has hit that and possibly rejecting just because there were some sellers waiting since 2015, or maybe someone noticed that we were back to that level and they sort of heavily sold, especially as we had fundamentals and sentiment change over the last couple of days, towards oil. Looking further left, we've got a spike high here in 1990, all the way down to the spike trough here, 95. And then if we look to the left, we've got 97.4 as the halfway sort of value area between this trading range. Ever since that trading range was sort of formed, prices have been, going sideways within it, and these sort of fib levels have acted as some sort of target, some sort of support and resistance. Just a reference, really. So halfway is currently where we're at. So confidence with that. If we were to go a bit higher, maybe we'd push through. Go back to test the highs here from 2014, back up above the 105. That would be the 61.8% retracement, which has been fully tested before. So not saying that this fib is, anything other than a reference really of whereabouts we are within this range. But interesting to know that traders have been here before, exactly where this monthly chart is finding resistance. All right, coming down to the weekly. Obviously, I've got a 99.590. We've had a big impulsive move to the upside. Things can overshoot, just because, we've seen an impulsive move up, then a contraction, and then another breakout to the upside. It could keep going higher and higher and higher. But if it was to go higher than this monthly resistance, the next sort of resistance is this weekly resistance from June 2015 at 99.590. The lows here, you can see this little area supply from May 2015 to June 2015, those weekly candles, obviously traders were there, either trapped or selling pressure happened, and could be some more sellers up there still. So maybe we get a push through. That would probably come on the back of Russia escalating some sort of risk event. So obviously the West is doing whatever they can to support Ukraine. That's not going to appease Russia in any way, though it sounds like there's 4 out of the 6 requests from Russia It could be met by Ukraine. It's just down to territories now. So if Donetsk and places like that are handed over to the Russians, so they've got a corridor between Crimea and Donetsk, maybe that will appease the Russians and they'll withdraw. However, just waiting to see what happens, obviously, with that. Trading, obviously I'm not going to take a long trade right now. I want to see what happens at this monthly resistance. If we do get a risk on event, then we're looking to see maybe CAD come off a little bit. So if we go to the day here, it'd be good, if we do get risk on at some point, get a little pullback to this daily high from the 23rd of March, and then we could possibly get a pullback, a bounce off this little balance area, and then go up to that level. However, if we were to break through this little consolidation here, so we obviously had a rally, base rally. If we were to get a rally, a base, and then a drop, I'll be waiting for some sort of drop, return back to the lows of today, and then a continuation down. How far could we go down? Well, if we were to go down, I'll be looking for somewhere it hadn't been tested, so some sort of imbalance area here. So the last imbalance would probably be the highs from the 9th of March. That looks like the lowest before we get below this balance, this larger contraction here. So if we were to put a fib up from this fractal up to this potential significant high, the really deep retracement, if you like, is in the middle of this candle from the 11th of March, 0.786 fib retracement at 91.38. So we could come back down and test that, or we, like I said, push down a little bit further to this high here from the 9th of March. But obviously we need to sort of see that happen in real time on a smaller time frame. So maybe a 30-minute chart. Currently, if we're at monthly resistance right now, we had this sort of midnight candle sort of change the direction. Obviously someone took profits or someone started selling. And now we're just waiting to see if we can get a lower low or a higher high. We're kind of in the middle of sort of contraction, bit of indecisiveness. So we need to get either lower than 96.716, or we need to get higher than 97.337, and then see what happens. I mean, ideally, given the chance to go short and have the smallest stop loss, you want to be short from 97.637 with a tiny little stop loss up here, and then that massive asymmetrical trade to the downside might not happen. Obviously this candle here from London Open tested the low from this swing high. Maybe this is just a retest of that, and obviously current price actions coming down. Like I said, sentiment and momentum in this relative sort of strength scenario is showing that CAD yen is going to come down. So I'm not expecting to get up there today, but it would be good to sort of mitigate our risk. So if you were to go short right now, you'd put your stop loss above 97.36, and then you'd be aiming for some sort of lows, either taking out this swing low here from the 24th of March or down to the 23rd of March, and maybe these equal or relatively equal lows here, because there's going to be some liquidity above and below double tops and bottoms. All right, that's what I'm looking at the moment. See if we can get some sort of CAD yen short, and then good luck, go in the weekend happy, and I'll speak to you again next week.